Okay.
3,
Wait, go to live.
2, 1. We are live.
Welcome back to the 24-Hour Show. Thank you so much for joining us. We're your hosts, Brittany and Eddie. And today, we have another banger for you. What do we got, Ed?
We're going to be talking about Wolfe Research's recent downgrade
Dun, dun, dun.
of Robinhood. So with that bad news, we will share some good news too, because we just can't leave you guys right there. We'll get straight into it. Look at this. Robinhood market's at $55.99 on the day. Let's go. I'm not mad at it. I'm buying more. I thought it was going to run away from us at 66. We gave all the gains back since earnings.
We did.
Yeah, so it's bittersweet, but if you had covered calls that were at risk of being taken away, this is definitely a breath of fresh air for you. So, yeah, let's get
I'm okay with it, honestly. It's not too much of a loss for me. I'm quite happy with that pullback.
Yeah, well, let's actually get into what Wolfe had to say. Their research team has downgraded the shares of Robinhood markets from peer perform from outperform on valuation concerns. So let's see what Brittany has to add on that from the article. I know she has it up right there.
Great, let's get right into it. So, Stephen Schuback of Wolfe Research downgraded Robinhood to peer perform from outperform and remove the firm's prior $51 price target. Since the firm's previous upgrade of the shares in June, key drivers underpinning the firm's bull case have largely played out and are now reflected in the current valuation and share price. The analyst tells investors, with the GAAP EPS consensus having been revised by up more than 160% since June 24 and more than 600% over the last 12 months, the EPS bull case has now become a base case, the analyst added.
Wolfe Research is a financial analyst. They are not fintech. So this is an interesting one from the gate. I know they just mentioned in June 2024 that was the last time they actually had a viral analyst view of this. So let's go actually take a little peek in the past. Let's pull up that YouTube video of them
Wolfe
and
Research
their bull days.
Robinhood to outperform and boosting its
Let's
price
see why
target
this changed.
to 29 a share. And joining us now is Stephen Schuback, Wolfe Research Managing Director. Stephen, it's good to see you.
So it
sounds even like you hosted a dinner with the
wants
company.
Vlad to host.
Steak dinners, come on, Vlad.
What you heard, Stephen, you go to outperform on the name, targets 29. How come, Stephen? Let's talk big picture. Why do you think this is a name to buy?
Crazy to be like.
Yeah, well, first off, thanks for having me on the show.
Nothing's changed, and we'll see.
Look, I want to give some different perspective because Robinhood is predominantly covered by fintech analysts. I'm actually a financials and banks analyst by trade. But really what's underpinning our thesis, what we're looking for is durable earnings growth, upside to GAAP earnings. So forget the non-GAAP adjustments, underappreciated growth levers and a reasonable valuation. And so we came away from the dinner, quite constructive, just given there's a lot of growth runway ahead for this company. As we started to underwrite some of the levers that they could pull on the crypto side, active trader, expanding internationally, our estimates shook out 70% above the street, 70.
Wow.
And so it's very rare that we see that mind the gap, so to speak, or that upside relative to street numbers, where effectively the analyst community is not modeling any growth over the next 2 years. So definitely a lot of room for them to surprise positively.
Yes, Stephen, what do you think they're missing? What do you think the street's not seeing when it comes to Robinhood? What are some of those growth levers that you would zero in on?
Well, I think the most important component is actually expenses. So there is a tendency to focus on a lot of the brokerage
Still
metrics.
relevant.
But what's really going to drive the earnings growth from here is the fact that they have a highly leverageable expense base, where our expectation is that 90% of their expenses are fixed. They are going to see 75% incremental margins. So for every additional dollar of revenue, you're going to have 75 cents of that dollar fall to the bottom line. And it's that operating leverage that people are not adequately reflecting in numbers.
This is all still true.
And that's really the biggest source of upside. But even in terms of revenue momentum, they're growing organically at 20%. They're growing accounts at 5%, and that supports 20% revenue growth roughly. So as you start to think about that earnings growth algorithm, they're going to grow earnings at 30% annually, and the street is not reflecting any growth over the next 2 years.
Right.
You know, you look though at this
They were
chart here,
undercovered,
Stephen. I mean, what a move already, right? The
at this
stock's up
time.
about 75% this year. It's up about 130% over the last 12 months. I mean, how does valuation look to you at these levels?
Yeah, it's a good question. I'm glad that you asked, because I think it's important to really parse what's driven some of the outperformance over, and let's just use the year-to-date number of 74%. It's exclusively driven by estimate revisions. There has been no multiple expansion for this company. I cover 28 names. There are only 2 that have actually seen multiple contraction, and Robinhood has seen no multiple expansion despite 74% gains in the stock price. And so that's a really key differentiator. It's all been driven by improving fundamentals. It's not a function of a higher multiple. And so it's a much higher quality source of price strength that I don't think is adequately contemplated by most folks. And so for us, so long as estimates continue to get revised higher, this stock is going to continue to rally. And that's really what the data is showing us. The stock price is 91% correlated to estimate revisions. 91%. And we expect that estimates are going to be revised 70% higher by 2026.
One funny little part of your note, I have to say, Stephen, was when you said what this upgrade is not. You said it's not a bullish view on crypto price appreciation, meme resurgence, or anything roaring kitty. So their growth, those estimates are not contingent on sort of these various zeitgeisty things that come into the market.
That's exactly right. For us, it was really important that we could identify drivers that are durable and sustainable to drive that growth. The fact that there's going to be an occasional meme frenzy, or we're going to go through a crypto winter, we're really trying to normalize for all those factors. So normalizing for activity rates, normalizing for account growth, normalizing for organic growth. What does that mean in terms of earnings growth potential? And again, it supports an algorithm that leaves our estimates 70% higher than where consensus is today. And so long as those estimates get revised higher, again, this stock is going to continue to outperform. There's been a lot of noise on the regulatory front. There's been a lot of noise on the retail front with Wall Street bets and the like, and Roaring Kitty. That's all noise to us. That did not factor into our thinking at all here.
Stephen, thanks so much. Interesting stuff. Good to get your insight.
Thanks, Stephen. We appreciate having you on the show. We'll need you back here. We'll need you back here when you up those price targets again.
I would love to know what's changed, who got into his ear, because I love the sound of that, him being so bullish.
Listen to that part, though. He said that price is 91% correlated to stock analysis, to price targets.
Break that down for us.
So for Wolfe to say that they knew this in June last year, and now all of a sudden, after a huge earnings, which was the market rewards you when you do well in your earnings, and we went to 66, and now all of a sudden Wolfe Research wants to come out with the knowledge that 91% of the price is correlated to their analysis, not theirs specifically, but analysis. They put it out, and now we dropped all the way down to where we were before earnings, which I don't think is coincidence. I think because they knew that knowledge, they're using it in their advantage. I'm not saying market manipulation.
We would never.
Allegedly. This is just something to note.
So it sounds like Vlad needs to hook him up with a few more steak dinners. Or he is looking for a lower price target for his friends in the industry, maybe. Also, it could just be a natural pullback. To further touch on that, though, he points that he did make the point to drive it home that he is an analyst of financial institutions, banking. So he's not a fintech analyst.
Right.
Does that ever happen where an analyst from another sector would come and...
Well, I mean, there's such a thin line between fintech and financials. But when you're talking about Robinhood and you're talking about their peers, who's competing with them? You know what I'm saying? Like, does Cash App have what Robinhood does? No. Does Webull have what Robinhood does? No. I mean, at the end of the day, even the big guys like Charles Schwab are following in the footsteps of what Robinhood is doing. You know, they're not innovating, they're reacting, and they're basically trying to offer the same products, which is just, I mean, it's good and it's cool, and they obviously have a lot of people that are using Charles Schwab brokerage, but it's not what Robinhood is doing. When you're putting out new innovations after innovations, you attract new customers. You pretty much gain
build
narrative.
a synergy.
You build a great foundation too around what's being built here. So I mean, I'm so bullish. It's
Yeah,
you got to watch these analysis though. You got to watch them and pick apart what's going on, because it's not that's why I'm trusting retail analysts even more, because when you have these guys, they're talking about steaks and dinners and stuff.
You're not getting kickbacks, yeah.
I'm not getting no steaks or dinners or anything. So we're gonna come up here and kind of talk our shit. Yeah, you definitely want to put your own skin in the game too, and trust retail analysts, because stocks like Hood are not covered as much as they need to be, and I'm still seeing it. Like, people still think Robinhood can be a huge step in the right way for crypto tokenization and all the innovation that comes with finance. It's just such a big market.
It truly is. And Steven speaks about the how much it takes to grow and drive earnings. And the expenses to drive earnings are basically nothing when you incorporate blockchain technology and crypto. As you mentioned, Charles Schwab trying to kind of, follow and chase after Robinhood.
Yeah, they're doing 24-hour markets now, just like Robinhood. They copied the commission-free stuff. They copied the low expense. Like, they're pretty much doing exactly what works. Like, they wait for Robinhood to release it. They see that it works, and then they release a similar product. And to be honest, that's great. I don't want to be participating in a company that's following. I want to be in a company that is innovating.
Leading and trailblazing the way.
Trailblazing.
And when we have companies like institutional powerhouses, brokerages like Charles Schwab, Vanguard, and the like, and they just do move at much slower pace, as you said. Once they're kind of catching up to Robinhood has already been innovating and on to the next rollout, and they're just continuously trying to catch them, it feels like.
Yeah, I'm excited for these products that are coming in March. We already know that there's going to be a gold event in March, so I'm paying attention to the options right there. Maybe April 4th would be like my latest date. But looking out to March and knowing that a gold event is happening, products will be delivered, and most likely, because they're from Robinhood, Vlad, it's going to be innovative. It's not just some regular Joe Schmo event. So these things, I think, are going to be like how iPhone events are now, or Apple events are. Is like, I think Robinhood is going to have March gold events. We're going to be at these crypto events. We're going to be doing all kinds of investor relations, whether they have the summit for traders or they have an investor day again. These things right here are all going to culminate to just great product releases.
I absolutely see more product release rollouts like the Legend desktop trading. Absolutely beautiful rollout. Seeing that, the whole display, everything that they went through. Also the earnings call, seeing just not the theatricals, but we're getting that Vlad Robinhood energy of like, we are the threshold, and this is where you want to be.
Yeah, has anything even changed? You know what I'm saying? Like, this guy was saying, excited about active traders, excited about expanding to global markets. All we've done is move closer to that goal, but I don't think we've reached that goal yet. I think Legend wasn't even a thing when this guy did this analysis, right? The one that we just showed in this video. And so you look back and you're like, this still hasn't came into fruition. Like, the products are here, but the path still needs to be walked.
Yes, he even in that video touches on improving fundamentals, and he speaks about improving fundamentals as why they will be continuing to grow. But we've seen just so much innovation, creativity, and rollout after rollout, successful rollouts. So the downgrade just the math is not mathing for me here.
I'm okay with the downgrade. I'm not okay with the market reacting like if this downgrade was one says all be all. And
They love to buy, we should be buying the rumor and selling the news. We all know that we kind of got a huge pump right before earnings, and like you said, we gave it all back. But that is because people wait until hey, this is great stock, people seem to love it, let me get in while the number is up here instead of waiting for a nice entry point. And that's what seemed to have happened. A lot of people were excited about earnings. We got great numbers, great earnings call, and kind of said, okay, we're not invested. And this is a long-term company. This is the kind of company that you want to invest for a legacy, generational company.
Yeah, in 10 years, these guys, this app, the team, the products that they're developing could probably change the entire financial landscape as we know it. I mean, from right now, this shit is unrecognizable 20 years ago when you look back and you're like, oh, people had to pay commission fees and brokers and registered advisors were making money, and now all the power is in the retail's pocket. It's in this app called Robinhood, and it's like, yo, you can control everything, consolidate all your accounts there, retirement. It really is the future. And there is another analyst, Bernstein, who agrees with us, and they actually have a way better opposite vision of where Wolfe Research is going.
Bernstein, let's hear it.
Bernstein maintains Robinhood's outperform rating at a 105 target. How you feel about that? You like that?
I love that. I love seeing that above $100. And like we said, 91% of these is price correlated to the target price. So I hope that just sends us higher. That's almost double of what we would be. If you purchase that today and we actually achieve that price target, whew, love that.
Yeah, I like Bernstein. These guys have been covering Robinhood for a while, and they always have this bullish price target. And so what this means is that you can get in today and still double your money. I'm not in it for a double. I'm in it for a lifetime, to be honest. Like, I want to see Robinhood get into the S&P. I want to see Robinhood decide that, you know, they don't need to buy more companies. They have so much money on the balance sheet and they're doing so well, they're going to start giving back dividends.
Ooh,
I
yes.
want to get to these different moments in the company because that's where it gets real fun. But until then, you know, we're going to have to battle between analysts like Wolfe Research and analysts like Bernstein. So, but let's switch some gears. Let's see, that last Wolfe.
They were the pick of 2025. So
yeah, that's right.
Congratulations to Hood on that.
Yeah, they were the best idea of 2025, and we can actually watch a video on that if you want. Let me see.
I love that.
Bernstein making Robinhood its new best idea in its global digital assets coverage. The firm also maintaining outperform on the stock. Gautam Jagani, the analyst over there, and he's been sort of a bull on the digital asset universe more broadly here, but he likes Robinhood best. And a lot of this has to do with the regulatory environment. He points out that Robinhood, in comparison with Coinbase, just has a lot fewer, although it's exposed in crypto, has fewer crypto offerings, has fewer coins, for example, because it was more concerned with following the rules, I guess, than Coinbase is one way to put it. And now that the regulatory regime is probably going to change, he expects a lot more offerings from Hood.
Yeah, says, listen, I mean, acknowledging the stock has enjoyed a big run, but says to his clients, we see more upside as strong revenue growth is set to continue to drive profitability in 2025. Talks about seeing several catalysts for the stock in 25. Primarily, he says, to your point, Julie, crypto-related, including new tokens on its primary platform. By the way, Bloomberg, Morgan Stanley chime in too. They add the company to its financials finest list.
Oh, wow.
Sounds like a good list.
A lot of fans here right now for Robinhood, most certainly. Bernstein making Robinhood
Financials finest. I love
Financials
that.
finest.
So we made a few lists this year thus far. Forbes actually just released their FinTech 50 2 days ago, and Robinhood unfortunately did not make it, but we do see a few of Robinhood's partners on that list. I'm surprised. I'm wondering, do people
You have to take someone to a steak dinner.
I'm saying, what are people paying? What's the schmoozing cost around here?
Well, the only steak Steven from Wolfe Research is getting is a mistake. So this guy, he really sent the whole party down. I feel like everybody started selling once they read that. But
great for me. Send it lower, guys.
Yeah, it's a good time to accumulate if you are a retail shareholder. You may not get these chances again. Once March comes, we got gold events, we have crypto events in June in France.
So much happening.
Vlad promised these three events this year, so you're gonna get Summit for the traders, and that's at the very least. Like, we might even end up with some more, but yeah, I mean, this is just that time where you gotta put your money where your mouth is, and you need to do some more research, because if you're selling your assets because of an analyst comes out with a new report, like you're not investing correctly.
Don't let them shake you out of your bags. And this is why
Soft.
it's so important to have conviction. Put your money where your mouth is. If you're convicted in something, it's great that it's at a lower price tag. It's entry is more feasible for most. Then love that. But that's if you're convicted. And if you're not, don't have true conviction, then I don't think that your energy is going to pump the bag. we pump the bag because we have conviction in this. So what are your thoughts, Ed? Are we going higher, going lower? What do you see happening? In aftermarkets, we are already up to 5606.
Yeah, it doesn't matter. I'm going to be accumulating no matter what.
No matter what.
If you think of Robinhood at a price target of 105, $56 is a great time to start buying. Maybe play some cash secure puts at 50, see if any of them get filled, collect some premiums. There's so many options right here when you're playing Robinhood.
We always say always be buying, always be closing, always be making money.
always profit. Yeah, I think that's it for this show, though. We'll next time an analyst makes a report and makes the market move like this, we'll be back. So make sure you hit that subscribe button. Make sure you like that. Follow Brittany's Bliss on X. Follow Ed Monies on X. And yeah, that's it for us today.
We'll see you back here soon. Thank you so much. Goodbye.